Hi there, and thank you for joining us. It's not a word that financial experts use lightly, but a lot of them are using it today. Panic. Around the world, stock markets continued their terrifying plunge. Toronto's exchange dropped more than a heart-stopping 1,000 points in early trading, its biggest drop ever. We'll look at why more people are now predicting a worldwide recession, including for Canada. We'll look for advice on what you should do now and show you how it's all ratcheting up the pressure on our political leaders and changing the dynamic of the campaign. And our coverage begins with Mike Drolet, who's at the Toronto Stock Exchange. Mike.
Kevin, it was another roller coaster day for the TSX, dropping precipitously as soon as the opening bell rung, losing 300 points in just over 10 minutes at one point. At the end of the day, the TSX lost 573 points, which is almost a three-year low, and the Dow lost 370 points, capping off another terrible day in the markets.
It was billed as a mini summit to make sense of the Canadian economy. 5 of Canada's top economists spoke with thousands of investors, all looking for answers and insight. But with predictions of a mild recession to mild growth, who do you listen to?
Well, I think that's a million-dollar question. Unfortunately, I don't know that anybody knows definitively where it's going to end.
There's no consensus in terms of whether we're going to have declining economic activity for the next 2 to 3 quarters, but I think everybody has agreed that the growth over that period of time is going to be minimal at best.
And this was before the markets began to tumble. It was a turbulent morning for the TSX and for the Dow, which fell below 10,000 points for the first time since 2004. This professor says the Toronto market is more volatile than the Dow because it's based on commodities. And since all energy stocks, including oil, took a downturn, so too did the TSX. Put it simply, the market dropped because investors lost confidence and pulled their money out.
People are selling. I mean, prices are determined by the old classic supply and demand, buyers and sellers. And if too many sellers show up and not enough buyers, or buyers who aren't willing to pay current market prices or are looking for bargains, prices are going to drop.
So while Americans are suffering primarily in the banking and real estate sectors, Canadians are operating on fear. Many are selling everything, even at a loss, just to get out of the market. But make no mistake, experts say, the downturn in Canada can be traced directly to the looming U.S. recession.
If Wall Street had been less reckless, or if federal regulators had been more attentive, the financial crisis could have been prevented.
In Washington, Congress grilled the CEO of Lehman Brothers, whose bankruptcy last month set in motion a series of collapses of huge Wall Street firms, which in turn led to the $700 billion bailout package of the banking industry. Richard Fuld earned $52 million last year, but he says his pay had little to do with Lehman's collapse.
I want to be very clear. I take full responsibility for the decisions that I made and for the actions that I took.
Now, if what Fuld made last year isn't shocking enough, consider over the past 8 years he earned about $500 million. Tell that to Main Street. Now, to put the losses of the market in perspective, the 1987 crash saw total market value losses of 22%. Now, on June 18th of this year, the TSX hit an all-time high of 15,073 points and plunged briefly today to 9,618. So from its absolute high to its absolute low, it lost 36% of its value, which is equivalent to $571 billion. Kevin?
Boy, you got to hate seeing those numbers. Thanks very much, Mike. Well, today's sell-off was even worse in Europe, where a number of banks and other lenders are on the verge of a cash flow collapse. And just like in the U.S., almost everyone agrees Europe needs a bailout now, too. But Stuart Greer tells us from London tonight that could be an even tougher sell where you are, Stuart.
Kevin, unlike the financial rescue in the U.S., the European Union has to coordinate the actions of 27 different countries. But unity is collapsing under the pressure, leading only to chaos and confusion on the markets.
Some just couldn't bear to look. The London Stock Exchange plunging almost 8% today, its biggest one-day fall since the crash of 1987. All across Europe, markets tumbled and more banks bailed out.
We could still continue to see the financial global crisis really continue to hurt markets.
It's a global crisis, but each country has its own response, and the uncoordinated moves by European leaders has added uncertainty. In a stunning U-turn, Germany's chancellor announced private savings would be protected. Now other EU countries are under pressure to follow.
We will do whatever is necessary to maintain stability.
Now we'll see another attempt to come up with a unified response at a meeting of EU finance ministers. But the European Union was never designed to cope with such a financial emergency, leading many to say that the crisis here will only get worse. Kevin.
Stuart Greer in London, thank you. All right, let's bring in Canada West News Service national correspondent David Aiken. Now, David, we're watching bailout plans spread through Europe, Asia now, including protection of people's bank accounts. Is that something we might have to worry about here soon, too?
Well, no, and Kevin, this is a very important point to make. Regulators and politicians in Europe and the U.S. are trying to deal with a financial system crisis, and Canada is not. Banks in the U.S. and Europe are stuck with billions in bad investments, and that is impairing their ability to do what we depend on banks to do, namely lend money to businesses and governments in order to create economic growth. There is no evidence that any financial institution or big pension fund in Canada is in any kind of serious trouble.
All right, but just about everybody is losing money right now in some fashion, whether it's stocks, RRSPs, or simply customers pulling in their spending. We keep hearing stay the course. But, you know, the Canadian markets are down almost 30% since June. How long do you hang on?
Well, Kevin, I think here you probably need to take a deep breath and consider where you are in life. If you do not need the money you have in your RRSP or savings for a long time, say a decade or more, you have less reason to worry. And that may not make you feel much better, but time for you is your best friend. Markets go down, but markets also go up. And over the long term, bonds, stocks, you name it, your investments should increase in value. Those who are most nervous are those who are close to retirement or who are already living off their investments. Here, time is your enemy. If your RRSPs have lost value, it's going to be difficult to quickly regain what's been lost. And those are the people who are being cautioned not to panic, but to sit down with a competent financial advisor and patiently go through your options. Kevin?
These are tricky times, David. Thank you.